Hello and welcome to my very first video on this channel. Today I will be doing a trade recap. The concept that I'm using is SMC. For those who don't know, that is smart money concept. So for people trading Bollinger Bands, support and resistance, retail traders, this video is not for you. And for those who are new to trading, smart money concept basically consists of order blocks, breaker blocks, SMT divergence, and utilizing liquidity sweeps that are identified by break-off structures and a continuation reaction through other confluences. The strategy that I use can be implemented through all time frames and also sessions. Although I do not trade the Asian session, I only trade London session and New York pre-markets. So yeah, let's get into this trade. So the first thing that we did is, as you can see, we marked out our liquidity levels. We started off with our session highs and lows. This was the lowest low, so I marked that out as green so that I know that is a stronger magnet, a stronger pull for a price to reach. Why that is, I am not gonna get into that right now, but I might in future videos. So anyways, in case price got close to those levels, I would know where to put my TP basically. So I marked out session, high time frame, and usually I mark out news liquidity as well, but we haven't had any high impact news liquidity that is still available. Right after that, I marked out our SMT divergence. Obviously, we tried to find a high time frame SMT. As you can see, we found a bearish SMT at the 4-hour time frame. So I look at either the daily, 4-hour, 1-hour, the 5-minute, or the 1-minute. Sometimes I also look at the 30-minute for SMTs and bias, I guess. But we didn't find any at this higher time frame, so I went down to the 5-minute and saw this bullish SMT in case price wanted to move further up as per our initial sentiment. As you can see here, right before the open we had a bullish structure, but as you can see, we did not have a lot of bullish liquidity. We had these, and these. That's like 3 levels, and above that, all-time highs, as you can see here when I zoom up. So we favored the downside, and luckily we had this bearish fair value gap that got filled and respected right at the beginning. So we already started to get pulls to the downside. As you can see here, we broke structure at 3:10 and the London session opens at 3 Eastern time. So what happened right after the break is that we formed a order block and a breaker block. And at 3:15 we went into both of those. So what we do when we respect these areas, when we revisit them, is that we then go to the 1 minute. Obviously we were at the 5-minute, we go down to the 1 minute and try to see another continuation sign basically. So what we saw right here, if I can just pull that up, yes, we saw a fair value gap that was not in our favorite side. So what did we need price to do is that we needed to disrespect this one and revisit it, basically creating an inverse fair value gap. But what I usually do is that when I see two opposite fair value gaps lined up like this is that obviously I can't enter at this price because price might reverse and take me out. So I want to see a disrespect of both, and if we don't get a revisit on this fair value gap, all I'm looking for is another continuation sign. So breaking this fair value gap would enable that. Zooming out, we can see, well, not on the 1 minute, but if we go into the 5 minutes, we can see that we have still a opposing fair value gap right here and down here. But the thing that I've noticed is that if we have a lot of liquidity on one side that is supported by confluences, usually these gaps get, or imbalances gets very shallow fills. So slightly an aggressive entry right here, but you cannot trade perfectly, and you cannot avoid every single obstacle, obviously. So what we did is we entered right here on this candle, as you can see, sell 3 micro futures. That's another thing I forgot to mention. I trade futures, micros specifically, but we entered right here on this candle because we saw a disrespect of this fair value gap and this fair value gap, and according to this we waited for the next candle to enter. I don't know why it says that, but I guess we got a discounted price, so whatever, but we entered it and we set ours on this high right here to provide some margin for a retrace, but also for a market order. And what I mean by that is I don't place limit orders, so I don't get filled exactly at the price that I want. So as you can see, this was a 1.13, and I got in a little bit further down the line, so it was about a 0.99. So it was almost a 1-to-1, and that is why I do margins, because when you take market orders, you can't get filled at the exact price you're willing to buy or sell at. So my initial targets were this and this one right here. So if we drag it on here, obviously we got stopped up before price reached this target, but we got a partial profit right here. We had a sell of 3, as you can see here, so we took out 2 right here and then 1 here, so we got a total of 66% as opposed to 100% if we took out all the profits down here. But why did we have such a long TP? Well, because yesterday was a Monday and no news Monday, and as you know, the volatility on those days are horrible. But we did get a very strong move yesterday, which influenced me to believe that we were going to get either the same or an even bigger move today. Unfortunately, we only got 1 TP hit, and then we got stopped out right here. I trailed my stop loss and I put it, not a break even, but I put it right over this high. And why I did that and not break even is because obviously this is not a good example, but what we usually get is that we don't reach these highs or lows if we have a fair value gap that is favored on our side, and if we do, then we usually break the trading plan anyways, and as you can see, we did do that eventually. On the contrary, if we had respected this fair value gap that is on the favored side, we would have moved this trailing stop loss to whatever high is above that fair value gap. And we would have basically trailed it all the way until we got to our final take profits. Overall, great trading day today. We followed our strategy, which is the most important part. We didn't let emotions take over our trading plan. We did end in profits, but that is not the important thing. The important thing is to stick to the strategy, and over time you will start to make consistent money. So if you like this type of videos and want me to keep doing them, please like, subscribe, comment, and let me know. If there are any questions, comment down below and I will try to answer them as thoroughly as I can. Peace.